Hey, what's going on, boys and girls? This is MC Fire.
And Ice Cube.
Yeah, we've been graced with Q today, and she's gonna come join us for another Sunday night trade video. Um, we're gonna make this one pretty short because she's got to go to bed. She's got a very short attention span for a very short person. With that being said, this is gonna be a lot of what? What am I talking stuff already?
Yeah.
Is that gonna be a problem, or
Yeah.
are you think you can be used to it by today?
It's a problem.
Oh man, it sounds like I'm gonna get my butt beat. That's what it sounds like, y'all. So we gotta make this quick because I don't want to get beat up. So as usual, we want to tell you guys to make sure that you take care of the people that you care about. Okay, make sure you take care of them. Like Q, she doesn't do a great job of taking care of me. She be trying to beat my fantail. I don't know what's going on, man.
Why are you lying?
Am I lying though?
Yeah.
Oh my goodness. Hey man, it is what it is. But anyways, like just keep that good advice, man. It'll make you very prosperous in the long term. But no, on a serious note, really checking on your family, make sure they're doing good, guys, because even without the trading thing or the fire journey or whatever, you're always gonna have your family. So just make sure you tell them you love them today. Does that sound good?
Mm-hmm.
Yeah, heck yeah.
Yep.
Do you have any words of wisdom for everybody before we get started?
Words of wisdom.
Yeah.
Don't suck.
Don't suck. Don't be a loser or a sucker, right? Great advice, Q. I couldn't have told them better myself. Anyways,
Yeah, I was just say just keep keep at it. Like don't give up just because things aren't going your way.
don't quit just because you're losing or winning.
Mm-hmm.
Just be disciplined and stick to it.
Yep.
That's good advice.
Mm-hmm.
I like that. Discipline is the key in this thing, and that's why we're tapping in with you guys today. So, without further ado, we do want to tell you what kind of we're going to be doing today. First on the list is going to be we're going to be tapping into said bar charts. Then we're going to go look at the Forex Factory to kind of let you guys know what's going to be coming on the calendar upcoming. And then, last but not least, we'll probably bring into the front of the classroom the Fed Watch tool just to give you the date. Then we'll get into the hot takes, and then from there. We'll probably look at the futures market and some in plays. Nothing too crazy. We're not going to do the whole sector breakdown for every single sector in the market. We're just going to give you the in plays for today and look at the futures market really quickly. So let's get into it. We're going to switch to this screen. So I hope you're okay with that.
Yeah.
Yeah, Q's not going to.
Oh.
Q's like, I don't need no chair. First on the list is your Forex Factory, and all we do here is to tell everybody like what's coming up, right? So what's on the horizon in the future. I'm gonna zoom in here so they can kind of see it. Not too crazy. I think that's about good right there, so everybody can see. But essentially, it tells you you get the week of the 16th to the 22nd, right, of February, what major news events are coming up. So Mondays on the horizon there. Nothing really for the U.S. that's major, right? Red is like major, but there is something on Tuesday, and the where is it? Here it is. President Trump speaks. That's what it is, and it's tentative.
Cool.
So that could be a major change in the market. He could. There's been some talk that he might ask the Fed to actually cut rates or demand that the Fed cuts rates. Yeah, there's also something that's to be said with no tax on tips, no tax on potential overtime. We like that, right? No tax on tips, no tax on overtime. So that'd be pretty.
Overtime just because they tax?
Yeah, right. We got to talk about that. Some people be like, yo, what is going on? The more I work, the more you take. That's a problem, huh?
Yep, that's why I don't do overtime.
That's why she doesn't do overtime. And I do overtime, but kind of because I have to. But hopefully we get, maybe they can retro us 2024 too. That'd be pretty sweet, wouldn't it?
So, because he's speaking, would you say that you wouldn't trade on that day?
Because he's speaking, it really on that time, like a little bit before he speaks, maybe like 30 minutes. I wouldn't trade 30 minutes before like these. I wouldn't do that. Only because if he says something about the markets or he says, you never know what this guy's gonna say, right? So he could say anything. And if you're looking to get into a trade or on the markets, it could really affect you. It can have a big impact.
Mm. Okay.
So that's Tuesday. Wednesday, meeting minutes and employee. Well, that's for Australia. So really just FOMC meeting minutes, right? And then I think there's something also Friday, flash manufacturing PMI. So those are your hot takes or major news coming up this week. So keep that in mind. Trump's on Tuesday, and then Friday you're looking to just be mindful of Friday, your PMI. All right. La Next we have, not last, but next, we have bar charts. So why we bring bar charts to the front of the classroom is we just want to see if there's any rec sector rotation. It's like our overall big picture scanner, right? Every sector inside of the S&P 500 that we have. So you got healthcare, utilities, financial communication services, energy, real estate, consumer staples, materials, consumer discretionary, info and tech, and industrials, right? Um, and typically what I like to kind of bring to the front of the classroom here is what's leading. Communication services is currently up. You also have what's it called? Consumer discretionary is up.
Huh.
Financials is up. And
Is this
inf-
healthcare or is this infotech?
that's info and tech. So just to out because we play with these a lot, I'll bring the one to the front of the classroom so it's easier that are typically above the market. Right. So these guys. He's above the market. So these guys are above the market. Industrials above the market. All those guys are pretty much above the market, right? Now, sometimes they're not always above the market. Like consumer discretionary has actually been holding its own. But really, info and tech in financials a lot of times beats the market. Communication services also kind of beats the market. So those are the major big three, and then now consumer discretionary is also kind of above the market right now.
Mm-hmm.
Everything else is a laggard, and we'll bring those the notes that are not go through and click through here that are above the market. Boom, boom, cool. Oh, utilities also above the market. So shout out to utilities. Utilities, look at utilities coming in strong, man. We could bring utilities to the front of the classroom, but utilities, yeah, coming in strong. Utilities is above the market. Sorry, didn't mean to leave you out utilities. But we've already been kind of talking about who's been consistently above the market, and you could say info and tech, financials, and communication services constantly are above the market. You look back for the last year, you would say, "Oh yeah, it looks like this one is too." Industrials, but really, I mean utilities, but really, we really don't look at utilities as much as we look at info and tech and the other one, communication services. You know what's in those? Like your Metas, your Nvidias, your Disney's, Netflix, your Googles, stuff like that. So that's why when we can look at utilities, it's not like, you know.
So these percentages mean how far they are above the market.
These percentages basically like when you see okay, because the market is right 22%, right? So if it was at the market, right, like if it represent the market, there wouldn't be a percentage because everything would be above or below that. So what this is how much of the market is in those sectors. What it does is say, okay, in the SPY, right, overall, that's not in any of these sectors, how much is in the default SPY, right? And that's 22%. But how much is currently inside of this sector relative to other sectors, right? So there's more buying in this sector, which is industrials. There's less buying here in consumer staples, less buying in real estate, and then so on and so forth, right? It's basically saying, yeah, what percentage of what percentage of the overall market are people buying? Like where is most of the buying inside of the SPY happening?
Mm. Okay.
Where is most of the buying inside the SPY happening? So let's say, for example, if people are letting go of real estate, well, this is going to drop. Real estate is going to drop. If people are buying real estate, this is going to rise, right? Um, the ETF or the stocks inside of the ETF. And that's why I really like it. And you can look at what we got: stock market and sector performance. Well, stock market performance, sector performance. But really, it's not really the number that we really care about. We care about if the stock market's performance is going up, and let's say it's up 22%. Why is the real estate market only up 9%? Why is its sector performance, you know, so bad, right?
Mm-hmm.
So we want to see, well, relative to the other ones, who's really pulling most of the work. And what you'll see is these guys are. Mm-hmm. And the reason why I point these, let's bring him to the front of the classroom, is because people always wonder, well, how can you get a portfolio that beats the market? Like, I want to beat the market. Can you beat the market? How do you beat the market? Right? People are always saying, how do you beat the market? You buy things that beat the market. And if you wanted to go the safest route, let me get consumer discretionary up there, sorry. If you wanted to go the absolute safest route, then you consistently buy things that consistently beat the market. So you, like, for example, like the last 2 years, we beat the market twice. But why did we beat the market? We beat the market because we primarily buy info and tech in the communication services group. Why? Because it consistently beats the market. And we also have leveraged instruments, so we beat the market. So while the market returned maybe 12 to 20% last year, depending on which market you were looking at, we returned 53% last year. That makes sense.
Mm-hmm.
Yeah, that's like, it seems hard, but it's not. And most funds can't beat the market, but because most funds have to diversify, they can't be concentrated, so they can't just dump all communication services and then pull in all real estate, right? They can't do that, but we can technically, right?
Mm-hmm.
So there's that. Good question, though. Really good question. Like, really great question. Like, why do you look at it like that? I hope that's why. Okay, so we pretty much knocked out market overview, and our next big thing is we're gonna go over some recap, right? And in this sector, right, we're gonna bring us to the front of the classroom. In this part, this is where Q gets to kind of evaluate and say, hey, that doesn't look like you're doing your job, or hey, that looks like you're doing your job. Like, hey, like, critique my plays. And it's good to have somebody else look at your plays and be like, you dirtbag, why'd you take that? Right? So we're gonna bring some of these plays to the front of the classroom. So here we go. Here goes nothing. What do we have on the list? We're gonna go recap BY. What is that? BYDDF?
Yeah.
Yeah, reading mine. All right, first one on the list, right? And we're just going back for a week, guys. So she gets to kind of see will be all the action that we had for the week. As you can see here, we did take profits this week on BYDDF. So the initial buy was off our setup from here, and then a couple boom, 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 and we were able to take off 1, 2, 3. So we were able to take some shares off as it goes parabolic. I just thought it'd be wise. And if you look on the weekly, see it went up to 3 ATR, and I figured that'd be a good place to start taking a little bit more off. So bought here when the moving average is tight. Nice setup candle here. Thought it would be really smart. You think it's pretty good?
Mm-hmm.
What do you think
we got in at a really good spot.
Yeah.
And then you took profits off the table 3 times. I think that's great.
Think it's pretty solid?
Mm-hmm.
Heck yeah. Think we should go on?
Mm-hmm.
Okay. Sweet. And that play only took like 5 weeks. 5 weeks or so. We caught a nice parabolic move. All right, let's go look at your favorite. Oh. Yeah, a big O. So we kind of set the play in motion here. It's in a downtrend currently. We had a setup candle push to the upside, and then there was a break below it, right? And so we went on took it for the short, but it it didn't really push to the lows, and we got stopped out at this level here. So what do you think?
Mm, where do we get it?
Uh, so the arrows kind of represent if it's
That's
facing right. This one says that we entered here, and I thought it was going to break down and go down here, right? The rotational zones here, also the setup candles here, and we end up getting stopped out at the close of that arrow. So really, you want the reds to be lower than the star red, but it was above it. We got stopped out. What do you think?
mm, I mean, I could see where you thought that it was gonna go lower because it broke below the low
Mm-hmm.
of this one, this candle.
Mm-hmm.
So you got in, and
Yeah,
then
if
yeah.
we get in like with our setup, the ideal situation is it breaks that level, and you have that edge. So we were really hoping that it would follow through to the downside, but it didn't.
Mm.
Yeah, it's
Was
like
this where you were supposed to get out?
um. Well, I
Or
was we were great question, right? So break of the high here is kind of where you're supposed to get out when it breaks the high here. So this candle didn't really break that high, but this one it did. So when we got out, it was already kind of pushing, and we were able to get to it. It was already up here, so we let it go.
okay,
So what do you think? We just followed our
I
plan.
think that was fine. Yeah, yeah.
Okay,
I followed my plan.
follow the plan. Sweet. Okay, so next up is good old K Web. So you see K Web, right? We bought here. Tight moving averages there. Now, yes, this is red, but the 21 peer moving average is going trending up. It was trending up. So so the rule is when in doubt, 21 out. And we had a setup candle kind of back here, but I waited for a couple more confirmations, and then as it pulled back, and then I
Why'd you wait?
why did oh okay, good question, why did I wait? Because this was red, so we didn't want to get faked out to the downside. So I wanted to wait for it to push, slightly pull back, and then kind of show that it wants to go up,
Mm-hmm.
right? So it pushed, slight pullback, and then it's now up here by this day. And I said, okay, crossed above this, cool, we'll take the buy, and it punched. And then we rolled one, and then we rolled two. So we're still in this play, and we're in this play all the way up here. Yeah, that's kind of where it's currently at.
That looks good.
Yeah, it looks pretty good, right? Couple rolls.
Why didn't you? Let me see.
Yeah.
So you saw this one. Okay. You saw this one push. This one pushed up. Why didn't you get in like here rather than up here? Or did
Oh,
it just push too fast?
um, because I got in at the trigger. So that's actually a really good question. We'll bring it to the front of the classroom really quick, and then I can show you that. That's actually a really good question. Like, why didn't you wait for the pullback before you got in, right?
Mm.
Okay. And which one is this one? This is with KWeb, right?
Mhm.
Cool. So we look back, we can look back, we can look back. Okay. We bring this to the front of the classroom. This is kind of the arrow that we're speaking about. And this is the day that we get in, right?
Yeah.
So to speak. I think this one might actually allow me to go back as well. Might, it might not. There we go. We'll bring this one to the front of the classroom as well. So looking at it, right? Your trigger is up there. That's probably why. Because ideally, the trigger is the break of the high of that red candle. That's where I put my alert.
Mm-hmm.
So when it went up there, right, bing, I get the alert. Going back over the flex grid, I get the bing, the alert. And yeah, we could have waited till the pullback. I think I even said that in the video when we traded it. Actually, the fact that you're bringing it to the front of the classroom, it's really good. It hit my alert, and I was like, man, it's a 3 ATR, so I'll just wait. But I probably could have waited till it got down to view up,
Mm.
right? Waited till it pulled back to view up, took the buy, and then the rest is kind of history. It did took some more heat, which is fine, but probably the 10 minute would be more ideal. Took some more heat, but then it started doing what it doing what the edges relative edge, and
Mm.
so yeah, that's actually good. Yeah, you can get in like down here
Yeah.
as opposed to up there. So just wait till view up. Good
Mm-hmm.
insight. Very, very good insight. Heck yeah. What do you think we're good to go to the next one?
Yeah.
Okay. Let's go EQV. Okay. This is a buy. Yeah, it's not red, it's a green. We got an initial buy here. Kind of the same thing. You got so these are the moving averages. Technically, they're not over here because this is a relatively new company, but they are over here. Moving average is positive and it's trending upwards, and you get a red candle, and it's above all these red candles, right? So red and a green uptrend, we want to be a buyer, right? Ideally, we would like to get in down here, too little, too late, and then as it pushed, it kind of did the same thing we needed to do. So we gotta wait and see, kind of deal for EQV. What next we got on the list? APD.
Mm-hmm.
Sweet. So APD was a kind of a shorter term trade that we wanted to put on. We had some extra capital and there was a setup on the board. So to your point, I think we did what you suggested on this one, on this entry. Let's go bring that to the front of the classroom, APD. APD, it was a profitable trade. And if you notice here, it triggered up here. It triggered on this one.
Mm-hmm.
And then as it pulled back, we still took the buy.
Mm.
So it pulled back below the VWAP, but we were convinced that it was going to be a buy,
Mm-hmm.
and our stop was below the low of that trigger candle. And so because of that, it ended up pushing very, very well. And for the sake of, we had it essentially to the end of this week, but we wanted to go ahead and close it because data decay intensifies in the last week.
Mm.
So it's just the money's already there, the profits were already there, so we just took the profits.
Okay.
Did pretty good.
That's a good trade.
Yeah. And some of our trades are ideal. Like they're meant to be like 2 days to 3 weeks anyway.
Mm-hmm.
So this play basically took like 4 days for us to go from what is that, like 308 and pull it off at 317.
Nice.
Yeah, yeah, nice $9 move. So just good, nice, juicy trade. So we're gonna also take a look at the SPY. Now we did take a little bit of a day trade. And we don't really day trade. It worked out. This one worked out really, really good. But we don't normally day trade. And I want to bring this to the front of the classroom, but we did day trade that day. I remember I was out here and I was like, let's see if we can get a day trade if we get a setup. And we got a setup, so I took it. So it came in a little late though, but still got in. So you see how it pull down, almost hitting 2 standard deviations, and then you get this nice juicy setup candle that gets washed, right? So all this selling comes in, like just pretty much stacked, and then it gets washed. And so that's what our idea was, to take the buy, which what we're gonna stop out at the low there, push, slightly pulled back, and as it pushed up to close to 2 standard deviations, didn't quite get up there. It did eventually get up there, but when we were looking at it, I got a nice block candle, I pulled it off. So we got from 604 to roughly 605. Nice, almost a dollar move, there, and it was a bullish play there. So we got a nice day trade, and amount of work only went from 642 to 658. 642 to 658. So 10 roughly 10 minutes or so.
Could you have gotten in after that pulled back?
Yes. So after the pullback happened, there's not really a setup. But what you are gonna see is like, and I'll bring it to the front of the classroom here really quick. Over here, yes, very, 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 very good observation. Um, I'm going to zoom forward there because it's to our right. And I'm going to bring it to the front of the classroom. So if you notice here, this is your rotational zone from here to the bottom of here. Rotation means it's likely to stay within this range until it finds a new price to aggressively go to. So once it breaks that rotational zone, its ability to push is highly likely, which some people call going imbalanced, or a lot of people call it going trend. So now you're in a new rotational zone, right? You're not trading inside this rotational zone, but from here to, like, let's say up here, it's a new rotational zone. So if you leave this rotational zone, you're likely to test what?
I know.
The next rotational zone. That's exactly right. And so now it comes down and retests this rotational zone, comes here, breaks, starts putting orders above that rotational zone, and then pushes.
Mm-hmm.
So the idea is as it breaks, it could push higher. But to really day trade like that, you're gonna need to set those day trading levels and be consistent with those.
Mm.
And we, for the most part, we swing trade, and because we swing trade, uh, getting those levels, like when we like moving forward, we're probably gonna set up the Ninja Trader to do exactly what I described because we want to get in quickly with the futures and see if we can become a prop trader. Yeah.
Okay.
Pretty sweet. So that day trade on SPY worked out actually pretty well. What else we got? Tesla. It's going through the week here and kind of showing you what we got for a good old Tesla. So this Tesla trade is already kind of working out a little bit. You've got a buy here in good old Tesla off of this candle right here. Now you notice we're in an uptrend. So look on the weekly for a higher time frame. Got an uptrend on the weekly, and then as you jump to the daily, you see our setup candle, outsized candle going the opposite direction of the trend.
Yeah.
And then as they get washed, I went on and took this buy, and we're still in this buy, and it pushed, smacked into this resistance, and is getting rejected right now. But hopefully, come Monday, we can see some follow through. So we'll see. We'll see if we got it. But our stop out is the low. So we're gonna respect that stop out. See what we get.
Okay.
Okay, so we gotta wait and see. XLY is next on the list. So XLY is buy. Right, we took the XLY based off of it pulling down here and a nice juicy push there to the upside. So push, and then slight pullback on the day, but rotation, and then you see outside candle in the direction of the trend off a resistance level. We like to take those. Those are still actually valid. It has to be in the zone, right? So you see this one. This one didn't actually do anything because it pushed, but it was in like no man's land. But if it's close to a zone, we can take that. We took that, and a couple of days of pushing and a slight pullback. So we'll see if it gets some continuation for XLY.
Okay.
Palantir. You might like this one. Let's see. So Palantir took some profits off for Palantir, and due to really good earnings, really good earnings here, Palantir pretty much gapped.
I was
And
gonna say, look at that gap.
yeah, right. What do you think? Tell me your thoughts. Because these two arrows are where we were taking profits.
Profit.
Yeah.
I think that's incredible. Like to be able to have a gap that large
Mm-hmm.
and then take profits. Like I would have seen this and been like, "Yep, taking profit." You don't want it to go back because it's gonna fill the gap eventually.
Yeah, good call. Yeah.
So
So yeah, like I agree with you there. And then something I can bring to the front of the classroom is I like to for Palantir, I like to bring it to the front of the classroom because this is like the best fundamentals of any company that I've seen. For the most part. Maybe not like cash wise or revenue wise, but I mean if you're looking at like free cash flow over here, And then you're looking at cash to debt ratio. It's really good. So the green is cash and the little pink is debt. So they
Mm.
have like very little debt, and then free cash flow is increasing, revenue is increasing, shares outstanding is increasing, meaning the shares that are in the open market relative to the price of the shares.
Mm-hmm.
So that's also increasing. It's a good sign. So you got a lot of good signs here. Net income's doing pretty good. All their metrics are really, really good. So, and they got added to the NASDAQ recently. So, really bullish on this company. They're defense contractor, but they use AI to help do data analytics for defense stuff. So we got in that relatively early too. Like some of our average purchases were down here in the $10 and $7 range.
Yeah,
Like,
because I was gonna say, Palantir has been like one of our best players, right? One
yeah,
of our
yeah.
best ones.
And just to put it in perspective for the viewers, right? Palantir, we've been holding on to it since 2022, like the middle of 2022. So to see it play out, and then she like essentially like we watch it like a baby grow over the last 2 years. This was like one of the big ones that like we
Mhm.
took a chance on because we'd heard a lot of good things about it, and we were like, yeah, man, this could be pretty cool here, you know what I'm saying? So see it to go like average price $7 to $10 and then be at 119, and that's where we're pulling profits, for some shares is on the way up. We've been pulling profits, to be fair, on and off, up and down. So like from the 7, we added some more at like the $13 level. We added some more at like the $24 level. Then as it pushed, right, once it got up to the $40 level, you're like, ooh, that's great. So like even if you bought it at $20, it's gone up to $40. That's what, like 100% return right there. So this is where you start taking some off. You're like, oh wow, like, and then now you still got some. You're like, okay, we're gonna take some more off with more room to grow. So we're hoping that we're not gonna take any more off, but we want a pullback, and if we can fill that gap, cool. We got
If we get a pullback, would you say that's a good place to add in more um shares?
I would say that's
The
a good
pullback?
place to go ahead and take like contracts, because I like what I do when I'm buying shares is I like to buy things that are like,
Hello?
yeah, like cheap, low, not even in an uptrend, almost in a downtrend. Like when you look at XLRE, 'cause that's a really good question. When you look at XLRE, that's in a downtrend. So if I'm going to buy something, like hold it, I want something that's in the dumps, like BA, like Boeing. Like Boeing, I wanted to buy Boeing.
Did you buy Boeing?
Yeah, yeah, we got Boeing. So like, see how it drops, major fat drop here,
Mm-hmm.
and then you get some chop, then you get some more chop, and now so this price is a good relative price.
Yep.
So now when we buy some here, we buy some here, right? It's up above that. So if it pulls back, we get to buy some. This is the one that you want to buy kind of long term because of all the bad news that's happened. Another one is UNH, right? Recently did a reversion to the mean contract, but this would have been a great place to take a buy on UNH. You look back long
Did
term,
we
how
get you in it?
we got the contract for it.
Mm.
So when we got the contract and we let it go as a reversion to the mean. So we
That's
just,
because also it's pretty high, so
yeah, you can't get the leverage. That's exactly good,
right.
good call. You can't get the leverage. So you still take the buy on this and accept the risk, but you still trade it like you trade any other contract. You don't over leverage and you just play the play where it goes. And a lot of times the edge is to the 8 period and you let it go. So we bought it after it, crossed these guys, boom, caught them off sides, went to the 8, sold it, and then you see it get washed a little bit, right? So the play worked out pretty good. It didn't really advance much past his rotational zone, but it still applies. The idea is you really want to be looking for bad news to buy things.
So telling people who don't know how to trade or don't want to continue looking at the markets, would buying contracts be a good option for them, or would buying shares be a best option for them?
Great question. So it depends on your risk. and what you're able to do. So if you in time is really the most important factor in your question. Contracts, right? They have an expiration date.
Right.
Shares, they don't. So as long as the company remains healthy, then you can hold on to those shares. When they don't go bankrupt or get bought by another company, then you can hold on to those shares. But a contract, whether it be a leap, 6 months, 1 month, a week, that there's going to be a date where that contract you don't own the rights to those shares anymore. So it really depends on, well, how long do you think this thing is going to take, and what's your capital risk? Like, what are you willing to spend? But like if I had to tell somebody to do one or the other, right? I would say,
like brand new to trading, don't know jack nothing.
don't know jack nothing. I would say this, and this is not financial advice, guys, but that's a good question. I would say in the beginning, find companies that you like, that you know, that you like, you understand the business, right? So if, let's say for example, you like shoes, right?
Yep.
Let's do it. If you like shoes, Nike, right? You can see Nike is in the pooper, right?
I was about to say that's a nice top left, bottom right.
Yeah, that's a top left, bottom right. Yeah, exactly. Keep it simple. Keep it super simple. So Nike is losing money, right? And we'll look at where Nike is relative to its overall performance. So is this something that I think you should buy? Well, I think if you like shoes and you believe in shoes and you believe in Nike's ability to recover, right? Because you can't just say,
or you spend your money at that Nike.
Or you spend your money at Nike, right? If you think the market's going to recover, you think consumer discretionary is going to recover. Would I want to buy Nike up here, or would I want to buy Nike right here?
At a discount.
At a discount. That's exactly right. So find companies that you yourself have an emotional investment in, that you want to buy and hold for a long term if you're starting out, and buy them when they're cheap. So I'll give you a good example, right? Everyone looks at like Tesla. Tesla is $300 right now, and it's in the stratosphere. But no one was talking to, well, you gotta like, no one was paying attention when it was down here.
Down where?
I'll bring it to the front of the classroom. Good question. So down here, when it's changing trend from red to green, right down here at $170. Now you're looking at Tesla at $355. But when it's down here at 178, right? That's when you should be looking at it, when it's on a discount. So what I say, let's go back to our Nike example, is you can buy on the way down, and you can buy just to say, for example, you want to buy on the way down. There's two locations where I would buy on the way down. If it hits 3 ATR, take a buy. And if it trend change, take a buy.
If it change?
Yeah, if it changes trend, meaning.
So going from the red thing to the green?
That's exactly right. As a force of habit. If it's going 3 ATR to the downside, buy. If it's trend changing, buy. And then as it goes up a little bit, cool. Wait till it comes back down here again. Close to 3 ATR, take the buy. Another 3 ATR, take another buy. Trend change, take another buy. That way you're averaging in a little lower than normal, right? So that's how I would do it. And it's counterintuitive because you're like, man, I'm taking losses on this, but not really, because as it goes down, if you're expecting it to go up,
when it
goes up, you will have gotten towards the bottom of that move. You don't know when it's going to turn around, but you have a lot of shares for when it does. And I'll give you a last example on that question, because that was a very good question. Look at this, is CACI. But this is CAI. This is interesting. Yeah, this is khaki. This is interesting. So this is CACI, but it's up at highs here at 56, and then nothing, right? And this is in November. Now I want you to notice something. Yeah. Yeah, same kind of company. Let's go look at November. So after November, something happened. Something happened where that top peak stopped and then it. Ooh, ouch. I know, right? Funny bone smack. It sold off, right? So I'm looking at this and I'm like, man, this is something we probably can look into.
Okay.
Um, this is khaki INT relative to just CACAI. Same company though, but major difference. Something happened, and the fundamentals had to have changed. So let's say, for example, I wanted to be a buyer here, right? I'd want to take a buy here, and for a little bit you catch a windfall, and then it comes back down at 3 ATR. I want to buy some more. So you're really only buying in these two spots with this much potential upside. If it
Mhm.
recovers, if you believe in it, right?
Right.
But you have to make that decision early. And so 3 ATR is your best bet. 3 times the average weekly range. When it drops, take the buy. Take the buy. You'll feel good. I'm telling you. Now you gotta have some chops. So it doesn't mean that it's just because you buy there, it's gonna go up. But to show that it works, to show that it works, the whole time in the queues, we were buying in a downtrend. So most of our buying in the queues was after it sold off like a lot, sold, and then we're getting down here and take the buy, and we took some more buy, and then buy. Great. So we're buying all down here. So now that the queues have a trend change recovered and it's done all this, right? There's massive windfall. But when we're buying, we're not buying up here. We're buying like massive downtrend, 3 ATR, trend change. It's not perfect. This at this time we're getting money, we're putting it in when we get it as a good discipline. But then as it starts to push, we're just reaping the rewards. We don't have to, you know what I'm saying? So now
Mhm.
it's up here, and now we're just trading contracts on stuff like that. It's in the and you can trade contracts. And if let's say, for example, this is another reason why contracts are super powerful. Let's say you get a nice pullback, and this contract, right? You have a contract for a call, and it goes screaming to the upside. Well, at that point, you have contracts. You have the rights first to buy 100 shares. So let's say it pushes, and you want to hold those shares.
Yeah.
So you could say, okay, it's pushing. I got my money together. I'm gonna put my money down for 100 shares, and I know the price that I have is pretty good. It's already started to push away. Boom, it's all the way up here. So I am going to exercise my contracts to get those 100 shares. I got to pay for those 100 shares, right?
Mhm.
But I know my 100 shares are already profitable, and they'll probably continue. The trend is now in my favor. So you can own the contract, wait for the shares, get the shares if the trend starts to move in your favor and you believe the trend will continue, right? It pulls back here. Let's say you get another contract, right? This is a spot you want to get another contract. It pushes, really rips, and you buy some more shares there. So you're buying shares at these two spots. One right here, one right here, right? On the pullback, you take the contract and it starts ripping. You're like, oh, okay, I'll buy it. I'll hold the shares, right? Cool. And then you get another massive pullback here. And you say, okay, I want to buy a contract, which we did. We did do, not on this one. We did it on NVIDIA, but yeah, essentially it's literally the same thing. We see this major pullback here. We bought a contract there in that same spot. So if we wanted to buy the shares of Nvidia at the spot, we could have. Is that a good
Okay.
spot?
Yeah.
Yeah. So
It is.
so to answer her question to you guys is the system works, but it just depends on, do you want to own those shares? Number one. Number two, your time horizon. Number three, what's your objective, right? If you're trying to build a portfolio, if you're just trying to get in, get out, that's going to matter. But you need to, instead of like looking for the holy grail, you just need to learn what's good for what. What are contracts good for? What does a good company look like, right? Is this something that I want to invest in over the long term? Like Nike, like Boeing. Does the world need this in the long term? Warren Buffett says the best things to invest in are companies that have pretty good revenue streams that you understand that have hard moats. What's a hard moat? It means that this company has certain things that it's going to be hard for other companies to be competitive. Just know that if you're making money, somebody's going to want to come behind you and do the same thing you do as a competitor to make money. So if what that person does, that company, is make money and it's hard to get in the industry, that's the company you got to look at. Any Joe Schmo can come in and make some shoes, but not anybody can come and make an airplane, right? And so that's why we look at Boeing and we're like, there's only three people that make airplanes throughout the world: Airbus, Boeing, and a new Chinese air manufacturer. So really, this has a big moat, and we believe in air travel. And it's the company's not necessarily super profitable, but it is, we believe, with after the strike, right? Boeing has a potential to recover, and we're getting in at a very cheap place. We're getting in at a discount. Okay, big discount. Okay, that's pretty much it on that. We got APD and then like COP, and then we'll go ahead and go through the hot takes. Got this one to the downside, right? System kind of works the same, right? You're in a downtrend here, downtrend, and then it you get a green candle here, and then it traded below as it pulled up a little bit. We went on and took that, and then it's continuing its failure. So that's really good. That's really good. So COP is continuing its failure, doing pretty good. And then I think we had, I don't know if we had APD on here. Yeah, APD also quite short buy. Okay. So the next thing up is the hot takes for today. There's only 1, 2, 3, 4, 1, 2, 3, 4, 5. So 5 that I even thought were even any good. So we'll blaze through those. Those will be quick. It's only 5. This one, it's in a downtrend right now, and then you see right here, it's ripping to the upside after earnings, but there's still some risk, so it could continue. Like if these guys get washed, it could go down. So you just watch for MLM to the downside. We also got Intel. This is another company that I believe has some potential. Like if you really believe in that company, I believe with as cheap as Intel is and its moat, like I was saying, then that's when you hop back over and you see, well, does INTC, how are they looking? They're cheap now. INTC, they're cheap. What's the company looking like? What's their revenue? What's their net income, right? This stuff like this, I don't like to see that. Your net income is almost zero. Your cash to debt, right, is you got some cash, but you got some debt there, right? Revenue, free cash flow is not looking too good. So as a business, are they making money? That's the question. Are they making money? The moat's high, but not as high, right? You got AMD in the space, and you got Nvidia in the space now. Chinese companies are trying to enter that market as well. So everyone's trying to get on the action, and you're already not making money. So is this something that you could potentially want to buy? Well, I would say maybe, maybe not. I would steer clear. ASML is though something that I would look at in the same space, but it has a moat. It's one of the few people that are a chip manufacturer, right? So from a company standpoint, this is one that you can buy options on as opposed to the shares. $750 per share is a lot of money. But if you got an option contract, that could be considerably cheaper, right? And you can make money on the move itself. And you can buy it for a year if you like. So we have one for NVIDIA for the year. Sound. Let's go sound. SOUN. Very nice. So you got sound. Pretty cool. Nice rip here up to 24.98, but it has since pulled back. And now you get this nice gap. So there's a gap here, and you got people stepping in a little late. So if we can start to close that gap with confirmation, I can take the buy at least to close the gap before we roll, make a decision, take profits off the table, or even look for it to push to new highs. Now you do have new earnings coming up, so that's something to watch out for. The last earnings call went immaculate, put it on a new uptrend, right? This one could save its day if the earnings are good. What do we got next, Q?
Next, wheat.
Yeah. So this is something that we've kind of been watching for a while, and this is what I'm talking about right here. It's on a downtrend, and if you want to be a buyer in something like wheat, This is the ETF for it. It just recently had a trend change. So a slight pullback on wheat means, hey, buy some wheat. So if you want, we put an alert here for a pullback, and if it gets down there, we're gonna take a buy on wheat, wait for it to pull back, come down and pick us up. But buying some on the trend change, because let's say it just rips, right? You don't want to feel like you missed anything. Take an initial buy one, maybe 2 shares, or relative to what you can afford, buy 100 shares, and then you could sell premium against it, kind of get your whale strategy moving, right? However you want to do it. So that's probably something we could do. Say buy some shares here as it pulls back, buy some more, and then sell against, and give it you essentially a covered call strategy. So wheat, definitely new trend change. It's cheap, really cheap. I mean, look how cheap that is. Super cheap, right? It's been pulling back. With cheap, can go cheaper, but look where it went and where it ripped to, right? And then look where it is now and the potential it has. It's at $5. So look at that and act accordingly. Can't say I didn't, can't say you didn't see it here first. SMCI. So SMCI, cool. SMCI there, new uptrend as well. That's kind of why we're bringing it to the front of the classroom. New uptrend. That's why it's a hot take. There is new uptrend pullback. This one's already triggered, already moved. Don't worry about chasing that. Wait for it to come down and give you a new trigger. But if you wanted to be a buyer in something like this, right? It's relatively cheap. It's been up to $122, and it's got an uptrend working. So just wait for it to come down, pick you up, give you a new thing. If you notice, when things go into an uptrend, they don't just stay in an uptrend forever. Like this might push and then pull back. So this pushes, goes flat. I'm pretty sure there's probably somewhere you can get a setup candle there. Pushes again, pulls back, comes down, probably picks you up, pushes, pulls back, comes down, pick you up. Doesn't have to come back to the beginning, but there will be a pullback. That's my point. So if you know you're in the push here, wait for the pullback or wait for the setup, right? I mean, I kind of
like a dance.
Yeah, just like a dance. Push and pull, right?
Mm-hmm.
And kind of to my point, right? There's your candle. So as you're pushing, there's a pullback. There's no setup candle, unfortunately. But on some of these other ones, you do get plenty of opportunity. Like this one, you do get an opportunity for a setup candle push, and you're fine. This one right here, too. Setup candle right here. Nice juicy push. Rip. Bam. Right. Setup candle right here. Break above. Take that. Stop out at the low. Don't get stopped out. It rips pretty nastily. So you can catch some of these plays. Pullback right here, very, very juicy. Pushes, slight pullback, take that buy. Wham! Actually rips in your favor. Same thing here, nice pullback, setup candle right there, crosses above, rips 5 days. Catch that one. You catch this one too. Boom, rip there. Like it works. So you just need to be patient, wait for your setup. That's why we made this system, is to give you a very simple system. Very, very, very simple system. Okay. I think that was the last one.
Yep.
Thank you guys so very much. We try to make it like pretty like condensed and juicy for you guys. I know some of my other ones are pretty long, but long story short, man, you guys have been awesome. And
I tried to ask questions that
like
people who don't normally trade would ask.
yeah.
So
Yeah, I mean, I think they were great questions. Like the question with the like, should people trade buy stocks or uh trade contracts?
mm-hmm.
As a skill set, though, I think everyone should be invested in assets. I think that trading, to answer your question directly as well, I think that the markets are the lowest barrier to entry of owning assets. If everyone knows to increase assets and not increase liabilities, then which one would you rather do? Would you rather, buy a house, or would you rather buy, a business? And I believe, I mean, you could do both, but the barrier to entry to buying a house is pretty high. But the barrier to entry to buying Nike stock, might be $23. The barrier to entry to buying wheat and to compound it might be $5. The barrier to buying Tesla stock might be $400 per stock. And now you have a small piece of a major company that has potential to grow. So what I would tell people is learn the skill, but while you're learning, Pay yourself while you learn. Pay to earn. Pay yourself while you earn. Pay yourself while you learn, I should say. Which is buy stocks and then go read the books. Buy stocks, go read the books, and get our setup. Get our setup. Because if you can get our setup, then you'll be able to see, and you can set alerts when the trend changes, when the moving averages cross. You can get a scanner that says, hey, I got outsized candles here. You can get a setup and say, okay, well, I can set a scanner at 3 ATR. And you should be doing that anyway. If you like stocks, then you should have a platform, whether it's Robinhood or anything. And if you could say, hey, if this thing drops 5%, I want to buy. Drops 10%, I want to buy. No matter what. 10% drop, I want to buy it. That right there, I'm telling you, is just do something. Don't sit on the sidelines while there's money to be made. Put in the work, put in the hours. So
analysis paralysis.
For those of you who have analysis paralysis, I would say you just start with 5 stocks, right? For those of you who have analysis that's a great question because I know who we're dealing with, and I'm going to answer that question. I have an answer for that question, and you might not like the answer, but this is the answer to that question. For those who have analysis paralysis, cheat on someone else's homework.
I like it.
So what I like to do, right, for those ones, let's say, for example, those ones that we told you in the sector performance, okay? This one, the one that is winning, or actually better yet, bump that. The one that's down here or the one that's winning. You're going to take these 2 sectors. You're going to say, okay, I got communication services and I've got healthcare, right? All these are highlighted. I got a healthcare and I got a communication services. Now I'm going to come over here to my thing. So I got the healthcare sector pulled up. This is a great question. And you're going to say, okay, I'm going to take in my list the 5 companies in the healthcare sector that I want and the 5 companies in the communication services sector that I want. So you'll come over here to your etfdb.com, etfdb.com, etfdb.com. You'll type in those 2 sectors. One is the healthcare sector, XLV, healthcare. And the other sector is the communications sector, which is the XLC, right? You'll come in. Let's go pull up these. You'll come down to holdings, right? You see communication service sector. Come down to holdings, and you get to cheat off someone's homework. Here are some ones you can pick from. You can pick from Meta, Google, Netflix, and 2Takes Interactive Services. Or you can look at all of the holdings inside of this ETF and pick the ones that you want to take. So just cheat, but don't sit there and do nothing, right? You say, okay, I can take some that are like already cheapies at the bottom, and I can take some that are good buys at the top, and just do kind of like what we said, like when it hits 3 ATR, save your money, put it to the side, and then cool, you're gonna take a buy. That's what I would do with analysis paralysis.
Nice. I like it.
Because and I think a lot of times people say the same thing you're saying. Where do I start? There's 4,000 stocks. I don't know what to do, right?
How the heck do I know which one to look at?
Which one do I look at?
So many to look at.
That's exactly right. And if you're cheating off someone else's homework too, you'll probably find some stocks that you're already interested in that are doing some good, and there's some that are going to be doing not so good. So you take the top, you take the bottom, and you say, okay, cool. Or you just take all the bottoms, right? And you say, I want to average into some of the best stocks in the bottoms. There's many ways to cut it, but don't sit on the sidelines. Put your money to work for you. If you don't, money is naturally designed to go from people that are not skilled in its use to skilled in its use. So you need to make sure that if you don't get skilled, you need to get the skills. You need to read the books. You need to watch the podcast. You need to watch live trading. We do live trading here, all that stuff. So don't just sit on the sidelines. Get in the game. Get in the game. Play, baby. I was just like, a beginner not too long ago. And now, like, making 50% and beating the market within 2 years. But that's because we constantly do what? Invest in ourselves. We're constantly getting courses. We're playing with indicators, and then we end up building something that works for us. We are like we never stop. We never stop being a student. Mentors, yeah, mentors, big money on mentors. I'm talking about like thousands of dollars on mentors, easy. Like with some of my favorite mentors, one of them was like $4,000. He was really good. The other really good training course that we got from I think it was a G7. It was like, how much was that one? Like,
You picked it up.
yeah, I think it was like 2000 to like, it's like anywhere from 1,500 to $2,000. And that course was like really good. I was surprised. Like after how much quality it was in there, I was like, dude, like this.
Away for this much?
Yeah, like I was floored, right? Absolutely floored. Um, there's other courses like the ones I got from Simpler, really really good ones. But that's because I just wanted to be a student in it and learn and read the books. I've like read countless books on this stuff, like probably 10 books.
Be obsessed.
Yeah,
You gotta, when you find something, you gotta be obsessed with it. So like being able to make this something that you kind of crave when you
yeah,
wake up, you crave before you go to bed. You're like, I just want to look at it all day.
yeah. And you don't have. I would say like if you think, oh, I can't be obsessed about something like this, I'll give you something you can be obsessed about, and then you can correlate it, right? So for you, it might not be looking at charts, but it might be I want to go on, I want to travel, or I want to put my kid in school, or I want to buy this car, or whatever the thing is you want to do with the money, because it's not about the money. I want to be prepared for retirement. I want to make some extra money so that I could, buy my wife a wedding ring or give my family a good retirement. Whatever it is, you have to be invested in that, and you have to say, okay, just like I go to work to do those things, this is eventually I work compounding in this thing. So if I can compound my resources in this, then cool, right? Uh, that's my hot take on it, right? I like to look at charts from a perspective of bottom left, top right. If it's a good company, bottom left, top right. Once it sells off enough, I'm looking at 3 ATR buys. I'm looking at trend changes, and then when it pulls back, and if it's a strong uptrend, it's pulling back to come pick me up. If it's not like cheap, I'm buying contracts that make it cheap, and then just trading it to the momentum. Boop, just as it plums down, picks me up. Take the buy. Boop, push right. And that right, I'm telling you, like we can get into portfolio management all day, but you're gonna learn it by being in the game. I can talk about it all day, but you're gonna learn it by just do the thing. Just get out there. Just stop being no joke. Get out there. Do the thing. So
Good.
yeah. So MC Fire here. You guys are awesome, and we have
Thanks, Q.
and I always love having Q here, man. She puts things in perspective. So we'll tap in with you guys soon and chop it up with you guys later, and see you soon.
Shalom.
Shalom. Peace.